Hello everyone and welcome to this week's weekly market view for Monday the 18th of July to Friday the 22nd of July 2022. My name is Vishal. Let's get out there and deep dive down into the charts to look at some key levels for this week. Alright, so let's start with the Nifty analysis, and if we look at the Nifty chart, let's load the Nifty chart. We'll start off with the monthly analysis. Just quickly sing this. All right, so let's start with the monthly chart. And if you look at the monthly chart, we are still seeing a little bit of a consolidation on the monthly charts on the Nifty. We are seeing this first level that breached, but there is a second level at just below the level, which is taking a little bit of support and consolidation. And if this level does hold, then we might see a little bit of a uptick in the market, but still the bias remains a little bit sideways to consolidate it. But of course, today being a Monday, what SGX is saying that SGX Nifty is pointing at a gap up opening, and as I read the numbers right now, it's approximately up by 168 points. We are definitely going to be seeing a pretty strong opening today. But let's see if the market sustains this opening for the remainder of the day. All right, let's move on to the weekly chart. On the weekly chart, we are seeing this entire monthly level of demand hold, obviously getting a reaction from the weekly chart as well. We do see this area here. Let's go ahead and plot this area here. So this is that supply zone. And we are still going to be opening a little bit below that supply zone, but when the prices do come to this area, we might have to start being a little careful on the long positions, and maybe start looking at going short on this market on smaller time frames. Let's go to the daily chart. On the daily chart, currently we did react to this supply level, which was pointed out by me last week as well. We did see a very nice reaction come from this level. Right now the market has taken a little bit of support at this level of demand and on the smaller time frame. One can also see that the option premiums have comparatively dipped down. This is also primarily due to the reason where the VIX also fell down substantially. Now, volatility is in the very lower half section, which means that the premiums are comparatively much cheaper than before. So ideally in this scenario, if you are a directional trader, you would want to plan some debit directional strategies, or if you are a non-directional trader, then maybe do some non-directional strategies, focus more towards debit side, would be in an ideal scenario for you to plan trades on the index. If we go and look at a key intraday level, let's go out there and on the 60-minute chart. So this was the level from last week that has played out. This was that drop-based drop, and this is from where the entire reaction came in. In fact, today we are expecting to open around 16,200, which means there is a very likely possibility we might open around this gap here. Okay, so key levels to watch out for today on a smaller time frame. If you go to the 15-minute chart, right? So this is the area to watch out for. Now this area has already been revisited once, but depending on the market sentiment, if the market does open in supply, there will be some initial profit booking coming in around these areas here. So this is the key level to watch out for on the Nifty if the market does gap up open into this area today. Let's move on to the Bank Nifty. Let's start with the monthly chart. So if you look at the Bank Nifty on the monthly, the Bank Nifty is actually leading the Nifty, and we have seen that in the past week as well. And right now, if you look at the monthly chart, the Bank Nifty also looks a little bit sideways, and with a slightly bullish bias for sure. If you look at the weekly chart, on the weekly chart, we are seeing again a lot of consolidation. The weekly supply zone is a little further up towards this rally based drop gap level, but we are still taking a little bit of help of this weekly demand zone. Let's quickly have a look at the daily chart. On the daily chart, we are again seeing a little bit of reaction coming in from a supply zone on a smaller time frame, and we'll get to that in a short while. But we also see some areas of demand created over here. Although this area may be considered to be a little in the middle, it's still an area where the prices can come and react and give a strong bounce and remain consolidated, or might maintain a little bit of a bullish bias from this area. If you can also see, the option premiums on the bank nifty are also quite cheap right now. So again, planning credit strategies would not be a good idea, and one should focus on planning debit strategies or some kind of a non-directional bias, towards debit strategies would be a fair thing to do right now on the bank nifty as well. Let's quickly have a look at the USD/INR. So if you look at the monthly chart of the USD/INR, the USD/INR did eventually hit the 80 handle. Now this is more or less a threshold level, or one can say that when the 80 level breaks, that's the time when RBI is about to intervene and try and make the rupee a little bit stronger. So we might see a little bit of a correction if that happens on the USD/INR, and if that does happen, and if the market does correct till around 76.5, then it's very likely that we might see a pretty strong rally coming in the Nifty as well. If we look at the weekly chart, the demand zones are far away from the current market price, but if you look at the key levels over here, there are multiple levels of demand that have been created. You have this one gap level of demand right over here sitting at around 77.80. And of course, on the intraday charts, there are much more levels on the upside as well. So you have this rally-based rally level also to watch out for, and then you have this rally-based rally also to watch out for. So these are a little high, much higher. Option premiums are fairly priced, so one can buy options, one can sell options in this kind of an environment. Let me just go back to the Nifty Bank intraday level that I was wanting to point out, probably that I missed out earlier. So let's go to the 60-minute chart. And because today the Nifty is gapping up, we are going to see a pretty significant gap up in the bank nifty as well. So let's quickly load the charts. And last week bank nifty actually reacted from this area over here, which was this drop, gave a nice move to the downside, barely came very close to filling the gap, did not actually fill the gap. So this was the gap that I was probably looking forward for, that it would fill, but it did not. And today now we are expecting a pretty strong gap up, right? So the key levels today obviously will be definitely so in case if Nifty is opening 200 points up, we would expect bank nifty to open 400 or 500 points up. And if that happens, then we must closely look at these two key levels, that is this area over here, 35,000, and also this area. In case the market does not respect these levels and opens further gap up, then these are the key levels to watch out for again, because the prices have just barely tested once and come here. Obviously there are still a couple of unfilled orders here, but then we'll have to see, because this area is already tested. So this is the range that we are expecting for the Nifty to play out probably this week. And once this range breaks out, then market will move a little bit into the next key levels of demand and supply. But right now for this week, this is where the range of the bank nifty is expected, and this is where the markets are expected to move. Today we are going to plan and analyze the HDFC Bank chart. Just to let you guys know, HDFC Bank announced its results on Saturday. So there will be a little bit of a euphoria as to where HDFC opens in this market situation. Now there are some important levels to watch out for. If you look at the monthly chart, the demand zone is still further away from the current market price. Markets are trading at around 1362. If you look at the weekly chart, We do have a level of demand here, but prices have barely come even closer to that level, and they are just consolidating. And if we look at the daily chart, the daily chart is also reacting to this area over here, right? So today, based on the earnings and based on Bank Nifty, we might see a little bit of a big uptick as expected on HDFC Bank. And if that happens, then obviously Bank Nifty is also going to probably open strongly, gap up maybe 400, 500 points, or maybe even slightly more. If you look at the volatility premiums, usually when earnings come out, the volatility premiums tend to be very, very high. But maybe on HDFC Bank, people are not expecting a lot or not expecting anything big. And that is the reason why the premiums are comparatively very, very cheap right now. So selling options in HDFC Bank is definitely not a good idea. Buying options will definitely be a good idea. But let us see today how the market opens. There is a key level of demand and supply on HDFC Bank that I would like to point out. And this is purely on the 75-minute chart. So the key level to watch out for on HDFC Bank. Let's go to the 75 minutes. So we have two levels of demand here. This is that key level of supply that we need to watch out for in case of HDFC Bank opening gap up. And the other two key levels of demand to watch out for, one level over here, which is this rally base rally. Prices have just barely touched this area and given us a bounce. So 1317 to 1304 is an area to watch out for, and then definitely this area at the bottom, which is the origin of the move. So these are the two key levels to watch out for in HDFC Bank. But definitely today the market's gapping up. I think that the markets are likely to open here, and we might see some kind of a reaction coming from this area today. So let's keep a close watch on HDFC Bank. So this is it from me for this week. Looking forward to see you guys next week. I hope you enjoyed the analysis. And if you do like our analysis, please do not forget to hit the like button on our channel, which is Sharekhan Education. All the best, everyone, and see you next week with some more analysis. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.